Hi everybody, Eddie here. Going to do a market update. It's been 6 months since I did my last update. There's a lot of people asking about the Bitcoin cycle, so I'm gonna go over it with this video here. Just a disclaimer: none of this is financial advice, just educational purposes only. Please don't sue me, bro. So this is the Bitcoin cycle on a monthly chart. If you can see. Every single time we hit around this line up here, that's there from the 17 cycle, and then the last 2021 cycle, and now this cycle. Each time we hit this area, we kind of get rejected. Now, that doesn't mean that we can't break through it, and it doesn't mean that we won't go any higher. It just means that each time we hit this area, we tend to get rejections. So as long as we continue going sideways or consolidate, there's more room for upside. So if I zoom this in on the daily chart, right, we're kind of in like a rising megaphone type of wedge. So it's an expanding wedge. So we see it started tight and start expanding wider and wider. And as you can see, I did mark some projections up here for this cycle when we were starting going out. And we rejected that upper range there, that green line there, multiple times. And last time we hit there, it kind of came right back down again. So it kind of like set the trap up there, it came back here. But so far, there's really nothing have changed. The cycle still looks like it's in place. And it tends to do better in November and December. That doesn't necessarily this cycle well because this cycle is a bit different since institutions got involved there. So there's going to be a lot more manipulation on the price. It's not like before where it's a lot of retailers are buying and selling. It's just supply and demand type of cycle. Now we're getting more into manipulation, just like stocks and everything else. Once big money gets in there, they tend to like to shake us all out. So. I do have a theory that BlackRock wants to take over all the Bitcoin. If you guys don't know, we're in like a dollar debasement trade right now. That's why gold's been going up like crazy. We'll go over that a little bit later on, but gold's going up like crazy. Bitcoin's not moving. So that tells me that the debasement trade, where they will devalue the dollar against gold, and then they do a revaluation of gold to pay down some of that debt to make it more manageable, to give them time to move the current financial system into more of a digital one. And I think Bitcoin would be the gateway drug into that new financial system. So if that's the case, and if Bitcoin is the digital gold, um, a lot of the institutions are well behind because right now majority holders of the Bitcoin itself are retailers, right? So a lot of the institutions now, since it's been approved to do the ETFs this year, a lot of the institutions are rushing to get the Bitcoin as well. So the way I'm thinking is they just trying to manipulate us retailers to shake us out and take our Bitcoin, uh, as well as get us to buy their ETFs so that they can hold custody of the Bitcoin while we get fiat currencies to hold on to this IOU that allows us to get access to Bitcoin. So the what I'm thinking is if this is still a continuation of the cycle, I'm thinking we're just going to come back and pull back. We're either going to consolidate into the lower part of the wedge, the rising megaphone, or we're just going to come down, retest this level. If this level holds, you can expect we're going to get a V shape back up pretty quickly into the highs, right? And the longer we go sideways, the higher it can go. Um, as you can see right here, the rising ridge right here, it's kind of conflicting with this green trend line from the past three cycles. So if this is the cycle where we break free of that, then we will likely break through that, retest it, and then do like a euphoria move up like we do in every cycle. And so far, if we're just going to hit the upper part of the cycle right now, we're aiming for like if it hits in the next 2 months, per se. We're going to hit around 150 to 160,000 area. If this lasts longer into later, maybe mid-year or even late next year, it can go significantly higher, right? Because you can see if we go it this way and then we end up making us we break free of the 4 year cycle and become a 5 year cycle. This cycle we could have pushed down, retest this, and then go flying off to about 200,000 by the end of next year, right? That can happen as well. If you know anything about the Bitcoin cycle, is usually it was a 4 year cycle. So if it's a 4 year cycle, we should see a peak, probably by January. If that's the case, but like I said, this cycle could be different. I know that's kind of cliche to say, but it could be different because there's a lot of different type of money flowing into the market, into the Bitcoin cycle now. So it's once institutions get involved, it kind of just ruins the cycle. So that's what I'm thinking. Anyway, that's pretty much it. So my game plan right here is, if it comes down, I'm watching this say 90,000 area really closely. If it breaks through that 90,000 area, chances are we're going to break this cycle down, and we're going to come down to around the 70,000. There's a lot of supply of 70,000, and then potentially, if this is the cycle high, and if this is the cycle high, then there's a possibility that we come all the way back down to around 50,000 um, in the cycle low before we can mix a continuation into a base, and then the next cycle comes through in the next 2 years. So that's usually how it happens. Usually base for about a year before a year or two before it goes into a continuation. So if that's the case, then we'll come down. We'll kind of fluctuate around this area right here. Usually is around the breakout area that it bases on. So this is the breakout area of this cycle. So we're looking around like around that 70,000 area. And if it's a steeper pullback, then we're going to get back into like 40, 50,000. And at that point, I just back out of truck on that. Uh, on that for the next cycle. So I'm not too worried about Bitcoin. Right now, I hold a lot more shares than I do of options at this point because if you guys remember in my older videos, 125,000 was my target. But since we hit that early in the cycle, I thought we are going to hit into the more further projections, which we had up to 200,000 on the extended projections, if that was the case. But instead, we just kind of chop around for past few months. Even skip up October. Usually October usually pretty good, but we hit early October, it was good, and then we kind of gave it all back by the end of the month. So right now it's just in consolidation. Like at this point, there's really not much you can do. I look at this thing as a long-term play, because the next cycle should be a really good one, if that's the case. And if we do come down, I just buy more into the next cycle. But I probably won't buy any around here, not unless we break out of the 120 125 range again. If we break out 125, I might add some for like a, in a year play for the next leg up. I'm still in it with a fair size position. I'm in a lot of Mara as well because Mara's kind of lagger right now, and its valuation wise is the only one that's still a value play. Everything else is kind of extended in way over value right now. So, and that one's also manipulated quite a bit. So if we take a look at Mara, so Mara's been lagger for like most of this cycle. Um, We've been playing options on this, selling strangles around our positions mostly, and each time it pops to 30, kind of have to trim it, and then use like a wheel strategy on this thing to create premium while we wait for it to pop. So if this thing breaks above 30, we're looking at around 40 and 50 as a target for this. And this can happen within the next 3 months if it does happen. Usually it happens at the end of the cycle. So the other ones like Hut, which we also have bits of, that one really took off. Anybody that mentions AI and converted to AI data centers has gone nuts. Like Cypher right here. Same thing. It went from like $2 to 20, right? COSK, that also was a lagger. It start going again. If that breaks above 25, we're looking at around 40. Irene is the craziest stock ever in this sector. 25 went to 70s. To like 250 went to 70s, mostly because they converted their mining facilities into AI data centers, and they're one of the first to make the move, so they're kind of had the first to run. We're also in Riot as well. That's also another lagger. Above the 25, you'll get us to 40. Wolf, this one we've been playing around with this one since two. I missed majority of this play because I went from two to I think it was six that we got out of when it was basing right here, and then I missed and then he went for the big pop, and we just kind of once he made that big gap, I was kind of game over for me. We can't, I didn't chase it. I waited till it consolidate. Once it broke that high, I did went in for a trade for like a couple bucks. Yeah, but we missed majority of that play because of this big gap up right here. So um, I did have precision, and then but at the time, Bitcoin hit 125 to 127, and we just want to take profits. So which kind of did, and whatever. We missed that one. But moving on. So the next little one that I'm looking at is this BITF. This is also a very small one, bit firm, easy to manipulate. So I'm looking at $8 as a target on this thing if it goes. I did sold into the pop, and I'm looking to get back into this once it consolidates and ready for another setup. So that's pretty much it for Bitcoin. I'm also looking at Ether as if Bitcoin's done, Ether will should be shine right afterwards. So if you look at Ether right now, it's kind of like a flag on the pullback. It's like a meh, right? So it's kind of almost like a megaphone flag, right? So it's kind of like a little cupping pattern here. I just forming the handle. I expect this if we're going to keep going, if we break the all-time high, I expect there's a full leg up to 8,000 if that's the case. Um, so Ether's going to be a really good play if we can still have another leg up. I'm still waiting for end of the year to see if we get that play. Like I said, unless it breaks below like this low right here, I'm still going to stay in it. And even if it breaks down, I'm going to keep it for the next cycle anyways. I'm going to keep about 30% of my portfolio into Bitcoin and Ether anyways. So it doesn't really matter. I'll sell premium around my position just to lower my dollar cost average. And then if he breaks towards the upper part, once he breaks above here, and I then enter more directional plays with options and go a little bit more aggressive. And that's when we make the big money if that happens. But so far, it's been a frustrating cycle because we hit those targets too early. And then because usually the best months are October, November, and December, right? So our October is kind of crappy. Hopefully we get a good November, but because the markets right now is really extended, it may also drag Bitcoin down as well once we start pulling back on SPX. So let's take a look at SPX. I got a lot of drawings on SPX. Um, Let me see. I'm gonna hide everything just to give you a kind of like a chart. So if you look at SPX, the main cycle is from the COVID lows and then the 2022 low, right? So if we draw a trend line up here, we're kind of like in a channel. So if I show these back on, so you see that I have the channel drawn on the yellow line. These are some of my little notes that I put in the previous cycle. Maybe I'll show that on SPY, be easier. I don't look at SPY chart much because it has dividends, so it's not as accurate as SPX. Right. But similar. Right. So it's kind of like again, like rising Oh, come on. Kind of like a rising wedge as well, right? So you can see. So this is so with megaphones, you have to be very careful with megaphones because it's a broadening type of pattern where it starts off tight and then it expands. And as you can see, we're in the upper part now of the expansion. And this is the area that you have to be super cautious about. Now, it doesn't necessarily mean we'll come all the way back down here real quickly, but you can. Right. We on SPX we have a target of 7,000. So we hit 5,900 last week. It was pretty close. So, if you want to pull back, this would be the time to do it. And if they want to trap all retailers, November's the month to do it because November's the month that everybody piles in for the risky trades, because that's usually the case for majority of the years. November's been seasonality wise is a really good month for stocks. So we'll see what happened this November. But right now, as you can see, we're very extended. We're up there in time. And if we do come down, we could just do something like this, like just not very steep pullback, but a decent pullback into the 50 and then continuation up to here into next year and then come down in the ABC type pattern, right? And then come down like this before possibly a continuation. So one of the things that you guys should know is we're not really in cycles like cycles before where we can go into recession. The way that the central banks works now, each time we go towards a recession, they use QE as a tool. So QE just basically buys up all the bad assets and then print more money, um, and create a huge supply of money, which devalues our purchasing power. But it just basically provide liquidity, and each time it provides liquidity, stocks go back up, right? So they've been doing that every cycle now instead of letting things just to collapse and work its way back out while it was still shallow. Now we're really deep in, right? We basically, if you look on the monthly chart, we've basically gone straight up ever since the financial crisis, which is when they started the QE, right? So basically, they just keep printing more and more money, and as they print more money, stocks keep going higher because purchasing power, yeah, if you hold in dollars, just keep going down. So you pretty well have to invest it, and usually that means stocks go up, gold goes up, Bitcoin goes up, real estate goes up, right? That's why everything's on affordable right now. It's not that things are getting more expensive, it's just that our dollar's getting devalued against her assets. That's why nobody can afford a house anymore, right? So if you look at this, we're in an expansion. So if we're going to hit up, it's very likely we'll pull back to right here. And then if we pull back from there, I'm guessing we're going to get this. Like as a continuation. It's just going to get crazier and crazier until the bubble bursts, right? So whenever that is, don't try to anticipate a bubble burst. I uh, I usually just let the price confirm it for me, right? So if we're going to break down, if you look at this 50 period monthly moving average, it's been bouncing off that level ever since 2008, right? So this is the target we're looking at. It's this area right here as it keeps going up, right? It should bounce off that. Now, if it breaks that, then I'd be scared, right? Then it's coming all the way down to here, which would be craziness. That's like what's that? That looks like 80 or 90% pullback if that's the case. 60% from here, that's not too bad. That's a normal bear market actually. But I'm looking at right here like a 15-20% correction once we hit some of these upper levels right here. And then I'm pretty sure they'll start printing money again if that happens. Um, And the like they can't really let the market crash at this point because they require um the market to be stabilized so that they can issue more bonds, more debt, so people can buy the debt. Because nobody will buy the debt if the market crashes. Um, at this point, it's just not. They can't really raise interest rates any higher. They'll default on their own debt, and they can't lower it anymore because you'll create hyperinflation if that happens. So basically, they just kind of let things go. They just mentioned that they're going to end QT in December. That means money's supplies are actually increasing again. So that could give us that euphoria push into next year, and then we'll probably get a correction next year. I'm thinking correction next year, and then 2030s when we have the big crash if that happens. It really depends what's going to happen next year, but if they just go and keep printing money and just keep moving this bubble gets bigger and bigger, that's what is going to happen. And if they're going to print more money, that means that whatever money you have is going to get devalued even more. So they're right now printing about 8% money supply, I think. So that means your money is getting devalued by 8% per year. So if you're not investing in anything that makes more than 8% a year, you're actually going backwards, right? That's why gold's been going up crazy. So if we look at gold, I'm just kind of rambling on in this video because I got nothing prepared. I just felt like I need to do one because everybody's asking. So if you look at gold, I've been buying gold once we broke out this space here, and then you can see right here. I did mention this with the group, but I don't think anybody bought any gold. I just buy physical gold, like a little bit. Keep it a third party vault. That's what you have to do. You buy physical gold. Don't keep it in your house. Keep it in a vault somewhere else. So right here you see a wedge. We pop. We have another base right here. It popped, right? It's just been popping all through these wedges. I'm gonna make this different color because green is kind of go back to white. Right. So we have another wedge right here. Popped. Now we're pulling back. I'm looking for this pullback to come down to around, I would say around 37, and somewhere between this area right here. Um, right. So I'm looking at this area right here. If we're gonna have a steep pullback, we're gonna retest this base right here. Yeah, and then it's probably going to chop in the range for a bit, and then we're just going to go skyrocket into next year. Next year's target, I'm looking at around 5 to 6,000 for next year, which is all the way up here. I can probably measure that out. If we pull back, depends where we pull back to, but yeah, we're looking at around somewhere between 5 and 6,000 for the next big wave up. And it depends if this is going to consolidate or it's going to be a steeper pullback. I'm kind of looking for a steeper pullback because I need more gold. I don't have enough, so I need to buy more. It was too expensive. I started buying down here, but I wasn't buying it often enough because Bitcoin was doing so well. But now Bitcoin is stalling. I want to allocate more into gold, right? And in order for me to get more gold, I need the price to pull back. I mean, my target for gold in the next, say, 5 to 10 years is about it has to be around 15 to 20,000 for gold to be anything meaningful for the debasement trade for the U.S. Because that's when they can once gold hit about 30,000 or so, they can lower their deficit to 90% debt to GDP. So that would be a more manageable position for them to do. So I'm thinking if that's what they're going to do, debasement trade to devalue the dollar against gold, that would be the price range that it has to be for them to revalue the gold to make it more worthwhile for them to revalue it so that they can lower their debt. And if they can lower their debt that way, then they can move on with their plan to get into digital assets, right? So that's what I'm thinking as a plan. But first, I need to see gold to start coming down. And if it doesn't come down, I'll just have to dollar cost average into it. I mean, I really hate buying it up at like 4,000 US. for 1 ounce of gold. But I mean, if it's not coming back down any further, you have to buy some. So, just start buying and just average into it. I would say it's better to buy physical gold than IOU. IOU meaning ETFs. I do have both because I like to trade it as well, and I like to hold some as a long-term play. So I'm in Canada, so the only place I can buy them and have them stored in third-party vaults is Kiko and PMX. So those would be the two options for Canada. In US, I'm sure you guys have plenty of options in the US if you're in the US. So, um, so anyway, yeah, that's the way to do it. I would start buying gold in physical form and have it kept in a third-party vault. There's a storage fee on that, uh, but it's not going to matter if we want to hit 20,000 in the next decade or so. So that's about a 4 or 5x trade from here. So that's not bad for a 10-year play. Usually I aim for higher for a 10-year play, but this is gold's more like sound money, right? So you should allocate 23% of that as kind of like a hedge against everything else. If the world goes to shit, you want some gold. Silver as well. You can have silver, but silver is just too bulky to hold. But silver actually has more potential than gold to go higher in multiples. It's severely undervalued right now. I think the ratio is like 80 to 1. Um, yeah, 82. That's the that's the multiple 82. So 82 means it requires 82 ounces of silver to equal 1 ounce of gold. And historically, like from way back, it should be significantly lower than that. So if you look through here, it always been around that 50, even below. 30 was the lowest it was ever been, but it should be around that 50, 60 range. So right now, silver is kind of undervalued by about 20 ounces, um, 20, 30 ounces. So silver is probably going to have a better play. The only thing with silver is I only have silver in ETF format. I trade SLV because physical silver, the spread on silver is not great. It's about 10% buy and sell. It's about 10% from spot. Where gold is about 2.5 each size, so it's about 5% altogether. So you're paying about twice as much in spread, right? And if you like hold it in, say at the bank or something, it's pretty bulky. Like you can't hold a lot of it. It's really, really bulky. So it's kind of hard for storage. That's why I like to trade the ETFs on it. And I trade ETFs that are backed by real silver, like SLV, not some IOU. So that's one of the ways I would play it on the silver. Um, but I mostly want to focus just on gold usually. Like I said, I want to see gold come down. This to me looks like an ABC corrective wave. So like A, B, and then C coming down. And this would be the area that I'll be buying. Like, if it hits down here, I'll be backing up the truck. I'll be start buying around probably 3,800 and work my way down to here, right? So I'll buy some here, buy some here, buy some here, and just get whatever I can, and work my way down. Other than that, there's really no game plan for gold. It's just basically dollar cost average and just hold over time. That's all it is. And you want to allocate about, like I said, 20, 30% of your entire asset, your entire net worth into gold. So. Gold was never something that I really considered before because I used to trade gold like back in early 2000, and then it went into like I'll go into long-term hold for you. It went into like this big long sideways action, and then around 2000 you see how hot it was, right? And then right here there was another about 10 years of sideways action. So it's tend to have 10-year bull cycle and then 10-year sideways and then 10-year bull cycle. So we're starting off in that other 10-year bull cycle right now. So Right now we're just kind of working our way up into that, and if things keep going, we should hit about that 10-year cycle around 2030. Anyway, let's move on really quickly. We look at SPX, so look at NDX now. NDX, same thing. It's just amazing chart right here. Um, it's been outperforming S&P widely, as you would imagine, because everything's going into the mags. So you're looking at this thing as a giant megaphone as well, right? So this is a giant megaphone. We're almost at the top of the megaphone, and you can expect the correction from this is going to be pretty severe once we do hit that upper part of the cycle and then get back into the bear market. So and everything's highly valued. Like right now, everything's priced for perfection. The only reason that we're still continuing to highlight this is because of the capex spending for AI. So once that slows down or stops, I'm pretty sure everything's just going to start tumbling down after that. So be very careful. We are in late cycle, so just be very very careful in late cycle. It's very volatile, and you always need a active exit plan for when something like that happens. Um, I'm mostly in cash, starting to get into gold on the long-term portfolios. My trading portfolio is still the same. I trade, so I go bullish and bearish, right? So it doesn't really matter as long as it moves, I can buy it. This is RSP. So RSP is equal weight. So you can see RSP's chart looks nothing like a real S&P 500 chart. That's mainly because the S&P 500 is being pushed up by the Meg stocks. So everything else is actually kind of struggling. So if you look at the breadth, if you do a little research, the breadth is actually really, really bad as we're making all-time highs. That means there's more declining stocks and there are advancing stocks in the S&P 500 right now, and we're making all-time highs. So that's a fair warning. Back in 2021, it was the exact same thing. The breadth was bad, and the megs were going up while everything else was going down, and that usually sign of a late cycle top. So. Let's move on. TLT. I'm not really looking at TLT much. I have a little bit of it, but just mostly for play, for small play. Uh, it's because it's coming out of the bottom of the base. But bonds is not really the place to be in anymore. So I am not trading bonds, I don't think. Not unless they start cutting rates rapidly. I don't think they can cut rates rapidly, to be honest. So I'm just kind of watching this thing, but I rather not trade anymore. I've been instead of trading bonds, I'll be focusing more on the gold and silver trade. So I'll be skipping that. Let's go over to the mix really quickly. Um, I'll make another video later on when I have more time to prepare. I kind of just went on and did this video because everybody keep asking. I didn't do any homework. Just kind of go off what's in my head right now. Okay, so Apple. So Apple was in this big downtrend while everybody else was going up. And then when everything else was going sideways, Apple went up. So Apple just made all-time highs. Um, it's also in the megaphone. Like everything's in the megaphone. So that's a that's a warning sign, guys. That means when things are good, it's going to be really good. But when things get bad, you better get the hell out really, really fast because it's going to come down pretty hard. So, oh shit, what did I do? Yeah, so it's not as big as a megaphone as the other one, but it's still somewhat of a megaphone. Um, I didn't include that little wick. I probably should. So if you do like this. It's more of a megaphone, right? So we can see we're in the upper range. Like I said, 7,000 was the target for SPX for me. And then we'll go into a crack the wave. If we don't crack like all the way down here. We're gonna crack halfway through it, and then we're gonna have another wave up just to push it off the edge, just to create that euphoria, and then just to create that FOMO, and then sucker all the retailers in, and then they're going to drop the bomb on you. So that's what I be looking at for that euphoria when everybody start telling me to go into stocks and what I'm thinking of these meme stocks. Yeah, that's the top. That's almost always the top. Um, Amazon, they have this big gap up on earnings, which is craziness on a stock of this size. But as you can see, it's actually start coming down. This is a inverse head and shoulder pattern at the highs. So usually that if it does go, it's going to have some runway to go. Like I'm looking at around $300 if this thing takes off. So if not, if it actually start coming down, fills the gap, and then it can't get back through it, that's the top. All right. AVGO, again there, we're still in this nice uptrend. There's a little cupping pattern up top here, kind of looking for the all-time high break. If it goes into euphoria, expect this to go to 500. If not, if this goes below this 320 area, it's going to fill this gap and it's likely going to retest the 200 down here. So Berkshire, I don't really watch it. Google, also crazy moves ever since April. So we haven't really stopped since April for like all of these make stocks. Kind of, I got into them and then I got out too early, like into this top right here, and then I never got a chance to get back in because the earnings were so good, it just like gap and go. So a lot of this I've been focusing mostly in Bitcoin, but the make stocks I haven't touched ever since the last break of the high. So you can see right here. It's going up like crazy. It formed like a little cup, went into up here, creates a little bull flag, extended up. So if this going to keep going, you're looking around, I think it was around the 320 to 350 zone. But it's getting up there. You can see that it's kind of expanding, so I do expect to go higher, but it's that area where I can't really go into it. I'm mostly just trading like day trading this stuff right now. I'm not really swing trading this at all because it's just too extended for me to swing trade. Even if it's towards the year end, I really don't want to take that chance because a lot of these because we're getting so volatile now. We've been up so much. The down moves are so big, right? So if you're like a day slow or something, especially with options, kind of wipe you out in one day sometimes. I don't read trade Lily either. Meta. So Meta had a big gap down on earnings. If you can see, this was also like a head and shoulder, and then got came back down. So this is starting to look very bearish on Meta. So this potentially could be the top. If it start just chopping around for the next month or so and can make a new high, that's the top. That's a whack off this distribution type of pattern if that happens. So just keep watching that. Microsoft double top rejection, kind of crazy. Just like April, straight up, and now it's double top. So there's signs right there. Also, if this breaks below this 490 area, ghost zone, and then all the way down to this target. So it could be like a big ABC coming down. It could potentially do this, and then boom, like whack. That's also a whack of this distribution type of pattern if it does happen. Netflix already start doing the exact same thing. Um, and it could dead cap, but I don't think it'll make a new all-time high. Not unless you can break this flag. Um, if you break this flag, then yeah, then you'll keep going, and you break this high, you'll keep going. But if you can't break this high in the next 2 months, expect it to come down sharply. Nvidia has some news with a bunch of deals. It is a $5 trillion company. There's a lot of things to trade because it's a $5 trillion company. Uh, It's really hard to make a double on this thing. Like really hard. $5 trillion require another $5 trillion to double this thing. So I just find that there's more opportunities elsewhere. Doesn't I mean it's still a really good stock. It's just that $5 trillion is just too big for me to make any significant type of money on it. Other than unless I trade options on it, but because we again we gone up since April, and it's just kind of moving on right here. So the target on this thing is about 250. So there's still some room there. I'm sure I day trade this too in like weekly lotto or something like this. And that's the type of trade I do on Nvidia. I don't really hold on to it. I don't know why I just don't hold on because I just can't get around uh the valuation on it. I mean, valuation wise, it's not that expensive anymore because they're just killing it on earnings. But it's just that it's like I said, it's $5 trillion company. It requires a lot of capital in order for it to go significantly higher. And I could find better trades elsewhere percentage wise. So that's the only reason. It's not that I don't like this stock, it's just that based on the numbers, it just doesn't make sense for me as a trader, right? As an investor, maybe, but not as a trader. Tesla, double top around the range, but you could form into a cup, and you can see we're forming into a handle. So if we break that 490, 500, it can go. Like this thing can go. As you know, Tesla tends to go parabolic pretty quickly when it does this thing. So if there's a catalyst, this thing pops and goes. If it doesn't, if it breaks, let's say it breaks 400, it's done. If it breaks 400, it's going to come down, probably chop around that 300, 350 zone again, and then could potentially come all the way back down to around 200 if it doesn't do that. So, I don't trade UNH anymore either. Visa is all done. Well, I think that's pretty much it. I only want to go through some of those stocks. Um, yeah, so guys, just I just want to tell you guys, be careful up there. We're in late cycle. That means there's going to be a lot of volatility. Doesn't mean that we'll top right away, but it does mean you want to be more cautious. Don't be all in. Don't use margin because if you use margin, just like last week, these big giant days that drop wipe you out. That's what the market makers do. They see when you're over leveraged, they kind of wipe everybody out, and then they'll continue higher, and you can no capital left when that happens. So just be very careful. Also watch the VIX, right? If the VIX is down to around 15, 16, be careful of some volatility expanding because in late cycle, whenever it comes down to that low, it tends to expand again. And if VIX goes above like 25, above 30, it's going to start breaking down. So you want to be very careful. Just keep watching that. Watch your SPX. That's the main chart I look at is SPX. So if XPX drops below 6,500 or so, I'm thinking that we're going to get a steeper pullback if that happens. Right now, it's just kind of my chart's really messy because I draw on this every day. Um, right now I'm looking around 7,000, 7,200, 7,300 maybe, and then we're going to get some type of pullback. So even like first, if we get like the first 2 weeks of November pushed up, it's chances are we're going to have this pretty steep correction in late November, and then it'll set us up for the Santa rally at the end of the year. So we got to see what happens this year. If we get a Santa rally this year, expect we're going to get continuation next year. If we do not get a Santa rally this year, expect we're going to hit into a bear market next year. All right. Signing off. See you guys later. If you guys want to follow me, I do this every day in Discord, leecapitaltrading.com. You can ask questions. We do a lot of swing trading, day trading, setups, talk about stuff. All right. Signing off. See you guys later.